Welcome to the lesson on partnership as a business structure. A partnership is a form of business organization in which two or more persons join together to undertake some form of business activity. In 1975, two young men named Bill Gates and Paul Allen formed a partnership to produce computer software. Today, their company, Microsoft, is a major corporation. Microsoft is a partnership structure that turned into one of the greatest business success stories. Partnerships are also very common among groups of professionals such as architects, lawyers, and accountants. Let us explore what we mean by partnership form of business structure and what are some distinct features of this structure. First of all, let us understand what we mean by the term partnership. The dictionary meaning of the word partner refers to a pair of people who are engaged together in the same activity. Similarly now, in the business context, a partnership comes into existence when two or more persons agree to share the profits of a business, which they run together. In the real world, no one likes to share their business profits with others. But, when the quantum of business is expected to be moderate and the entrepreneur desires that the risk involved in the operation be shared, he or she may prefer a partnership. Hence, we can now say that partnership is the outcome of a voluntary agreement between the persons. Once the agreement has been arrived at, these persons would be known as partners. Please note that it is not necessary that all partners should equally participate in the business. This business may be carried on by all or by any of them acting for all. Remember, those who enter into an agreement are individually called as partners, and collectively they are called as firm or partnership firm. A large number of businesses start as partnerships. However, some large companies also began as partnerships before becoming large corporations. A partnership is a form of business organization in which two or more persons join together to undertake some form of business activity. The concept of partnership revolves around: Number 1, it is a business organization. Number 2, where two or more persons means more than one person is involved. Number 3 is joined together. They enter into a partnership contract, verbal or written. And lastly, it is formed to undertake some sort of a legal business activity. Now, let us understand some distinct features of partnership as a business structure. Forming a partnership organization requires a little more effort than the sole proprietorship. Primarily because of involvement of multiple partners, an agreement must be arrived on the partnership terms before you can start the business. However, still, the registration process is far more easy as compared to a company. Now, as we have explained earlier, that partnership is an association of two or more persons who have joined together to share the profits of business. It simply means access to more capital, more resources and talent of all partners, compared to a sole organization. Partners contribute to capital and also share the responsibility of running the business and taking relevant business decisions. Now, one of the important aspects of this structure is that partnership is based on contractual relationship, which simply means that it is created by an agreement between persons who are called partners. This relationship is governed by the mutual agreement, which is called partnership deed. Also, there exists principal-agent relationship, which means that the business may be carried on by all or one or more partners acting for all the partners. And this gives rise to the risk of implied authority, as each partner can act as an agent of the firm. Hence, the acts done by one partner would bind the firm as well as all the remaining partners. Another limitation of this type of structure is that in respect of the business debts, each partner still has unlimited liability, as in case of a sole proprietorship. This limitation can be overcome by registering a special type of partnership called as limited liability partnership. A partnership is a very common form of business organization. Partnership-type business structure is generally favored when the business is small or medium scale. Starting a partnership does take some effort, but relatively very less amount of documentation is required. Depending on your country or geography, local and state governments may require some amount of paperwork. But it is minimal compared to other business structures, and you can usually complete this without much difficulty. Hence, the cost of setting up and organizing a partnership is relatively quite low. Ease of setup and registration. The partnership firm can be incorporated by drafting the partnership deed and entering into the partnership agreement. Apart from the partnership deed, no other documents are generally required. In most countries, it need not even be registered with the registrar of firms. A partnership firm can be incorporated and registered at a later date, as registration is voluntary and not mandatory. Let us now understand the quick steps that may be required to start your business. The first one is, of course, deciding a business name. Choose the business name and nature of business. You may also need to apply for a certificate of doing business under an assumed name. Most businesses don't need to register with the federal government to become a legal entity other than simply filing to get a federal tax ID. Small businesses sometimes register with the federal government for trademark protection or tax-exempt status. You need a place to run your business. Finalize the location. You also need to plan and decide on a location for your business. Finalize the partnership deed. A partnership agreement is an internally binding document between all partners that defines how business decisions get made, each partner's duties, powers, and responsibilities. It's widely recommended to create one to protect yourself and your business, even if your state doesn't mandate it. There may also exist some licensing requirements. You'll probably need to register with any state where you conduct business activities. In some cases, based on your geography or the nature of the business, you may need to obtain a license from your local or state government. Some states allow you to register online, and some states make you file paper documents in person or through the mail. Most states require you to register with the Secretary of State's office, a business bureau, or a business agency. You may need people to help you run the business. Focus on staffing. If you need to hire one or more employees, you may also need an employer identification number. Open the bank account. This will come handy. It is advisable that you also set up a business checking account so that you don't mix up business and personal spending. This will also help segregate all business cash flows and help you operate in the partnership firm's name. The next step might be to apply for sales tax registrations. If you plan to sell taxable products or services, you must register with your state's taxing authority. You may be required to collect sales tax on any products you sell to customers. Eighth step is taxation. Yes, you may need to file income tax returns. The net income from a partnership is taxed as a separate legal entity. Once all of this is done, start working on sourcing your products or offering your services. You are all set to welcome your customers and earn profits. When a partnership is formed, the partners sign a special legal agreement. This partnership agreement is a written document and also known as partnership deed. All partners must agree to the conditions stated in the partnership agreement. The purpose of this written document is to prevent later disagreements among the partners. Now, let us understand what are the typical terms listed in this document. This document basically states how the partnership will be organized. The agreement starts with specifying basic information, like the names of the partners, the name and the address of the business, and the nature of the business. It also specifies the amount of investment that will be invested by each partner. It may also call out respective duties, rights, and responsibilities of each partner. Whether all will be working partners, or firm will have anyone as sleeping partner, etc. In a partnership, you and your co-owners decide how to divide profits and losses from the business. Partnership deed captures the agreed procedures for sharing the profits and losses of the partnership business. And this document also lists down what will happen if the partners decide to discontinue the business. What will be the dissolution terms? How the assets will be divided? What will happen if the partnership is dissolved? What are the advantages of using partnership model for your business structure? Well, the first one is the ease of formation. A partnership is relatively easy to set up, as explained earlier in this video. The second factor is option to have more skills and knowledge available to the firm when compared to a sole proprietor. The skills and knowledge needed to operate the business in a sole proprietorship is the responsibility of just one person. In a partnership, however, the various partners can contribute different skills and experience. The pooling of talent and knowledge is one of the key advantages that partnerships have over sole proprietorships. Also, partnership will have more resources at the firm's disposal. Several individuals in a business partnership can contribute more money to a business venture than one person acting alone with only personal assets. Further, obtaining bank financing may be more feasible when more than one individual is responsible for the loan. Next factor to consider is the flexibility and operational control by partners. In any partnership, the operation of the business is the sole responsibility of the general partners. And they are also responsible for the success or failure of the business. Next, partnership profits are only taxed once. Based on the income tax laws of your country, you may be taxed as a firm or taxed like a sole proprietorship in the hands of partners. Both ways, tax rules provide for a single taxation. Hence, we can summarize that pooling of resources and availability of capital, clubbed with the flexibility of managing day-to-day operations, are some of the key advantages of partnership structure. Disadvantages of the partnership business structure. While a partnership can offer many advantages, a number of problems can arise when several people own and operate a business. If the partnership loses money or has financial problems, each co-owner is personally responsible for all of the debts of the business. If your partnership fails and the debts of the business cannot be covered by selling the assets of the business, all the partners will be responsible for paying the bills out of their own personal assets. Second issue is the possibility of conflict and disagreement among the partners. When several people manage a business, they may not always agree on important business decisions. A common reason for failed partnerships is that the partners have serious conflicts about how the business should operate, and they allow the business to suffer financially from these conflicts. Next disadvantage of partnership is the sharing of the profits with other partners. Irrespective of the amount of the hard work being put by each of the partners individually, the profits must be shared with the partners. The way in which the profits of the business are divided is outlined in the partnership agreement. And lastly, the life of a partnership depends on one hand on the willingness and ability of the partners to continue in business together. Secondly, when a partner dies or decides to retire or withdraw from the partnership due to any reason, the remaining partners may disagree and decide to end their partnership. Or they may decide to add new partners. In all such circumstances, the original partnership gets dissolved and new agreement need to be made. This new agreement essentially means formation of a new business. Hence, please note that partnership has a limited life and partnerships can end for a number of reasons. Company or a corporation structure provides relief to many of these limitations, and that is the reason that all large businesses are generally corporations. We hope you enjoyed this video as much as we enjoyed making. Complete course along with certification is available at www.technofunk.org. Please like this video, provide your feedback using our contact form and help us with your comments. If you like this, please share with your friends. Subscribe to our channel to get notified of new tutorials. And don't forget to press the bell. Thank you again for watching our video.